Hey everybody, it is Dr. Tamarra with PKT Podcast. I am here with the amazing Shateka Husser. How are
I'm
you?
doing amazing. How are you, Tamara?
I am doing great. So I'm so
Awesome.
excited that you're here. You know, this
Likewise.
yeah, this is another podcast that we do outside of our business podcast. This is all girly stuff,
I
right?
love girly stuff. Let's do it.
No, we want to get into it from a woman's perspective. Yes, we may do the news, we may do a little bit of gossip, we may do some business, but this is on the business side of Pwzzy Kat Talk podcast. So, Shateka, please tell everybody where you're from, what you do, and how you serve.
All right. So I'm Shateka Husser from Charleston. Everybody know about the Chuck, North Charleston, South Carolina. And I help you retire before you expire. So if that's what you desire and what you aspire, I am the one you hire. My goal really is to get your bank account on fire with a whole lot of lifetime tax-free retirement income that you will not outlive. So essentially, I'm a retirement consultant based out of 19 different states right now, right? So literally, I'm supporting nationwide. And my goal is to really help everyone achieve that lifetime income that they will not outlive with benefits. I'm your benefits bestie.
Girl, you know you speaking my language,
Okay.
okay? You know you speaking my language because
Yes.
we're all about on the family side. You know what we do is very similar, right?
Okay.
But a lot of the times, people don't incorporate the family and they're just all about self.
That's true.
So I think it's super duper important for people in our community to understand that you can put money away in an insurance policy, that you can pay yourself, you can get tax
Absolutely.
benefits, you can have a trust, and our people don't understand and know about trust. So explain, because girl, did y'all hear that bio? Did y'all hear her bio? Okay. I love it. Can you explain? It was great, but let's go a little bit deeper. Let's dive
Sure.
in a little bit more. So, how are people able to make money? How are they doing this?
So
Can
I
you?
Yeah, so actually people, they have money, right? Our community, we have trillions of dollars that we spend every year, right? And so we have the money, but it's like, how are you funneling the money? The only thing I'm telling people is make sure that you have a vehicle that you can funnel your money through that's going to be able to be building cash value for you while you're spending that money at the same time. Literally. So if you
Mm,
have debt to pay off, you can still pay your debt off. Funnel it through the policy. Okay, take your loan out, go pay your debt. You're going to reach your debt freedom date much faster. So if I had to do it all over again, I was a real estate investor, added one, right? I would have purchased my properties through my policy instead of just purchasing them right out. Another whole, game plan that a lot of people don't really understand.
no, they
But
don't.
so every liability can be purchased out, out of your policy. Why would you purchase liability with earned income that you trade time and money for? Why won't you allow the interest that your assets have made to purchase your liabilities? And so we're trying to get people to understand that concept. To your point, how are they paying for it? You can go in, like I said, funnel the money. Just funnel it. You need to have a legacy, right? Why would you not have a legacy? Even if you don't have children, you can still leverage the policy for chronic, critical, terminal illness. If you have a heart attack, cancer, stroke, dementia, long-term care, you now can leverage that. You can't leverage that. You can't leverage a 401k, 403b, 457, TSP, IRA, Roth IRA. You can't leverage those accounts, but you can leverage this 6 steps to financial freedom tool. Is the only financial vehicle that will give you all 6 steps to financial freedom. Why wouldn't you have one in your portfolio? Why? I don't
But you,
understand it.
but let's stop there for a second because you know just as well as I do in our community, they only showed us final expense. And for those who don't know what final expense is, it's death benefits. Okay, that's all they ever pushed to us. They
Yes.
didn't want to push to us building wealth. They didn't want to tell us about the IULs. They didn't want us to tell us about actual life insurance that actually builds upon itself and that can actually pay you money. So here it is. We're thinking, I really don't need I don't want to pay for death because we don't want to deal with the reality that death is imminent and that you need to prepare for it. But that's term to me is death, even though you can do some things with certain terms, but mostly term is death, dealing with death. Life is for living. That's why it's
Right.
called life
Yeah.
insurance.
See, you taking the words out of my mouth. But you know what it is? The carriers make their most money off term. So 98% of people are going to outlive term. If there's no one buying term, you won't see that many carriers. 2% of people will actually receive a payout from a term policy. So I like to tell people your term policy is your donation to the carriers. That's how they get rich.
Yes, because it's like, oh my God, we literally had one of our mentees who passed. And what was so crazy was we were like, hey, you need to get life. I understand, you're 60 something years old, and her policy had just ended. Why did she die the following month? On
Mm.
term, on a term policy.
Mm-hmm.
She died the following month, and she did not renew it. And she was trying to, yeah, yeah, she did not renew it. So they cremated her because she wanted to convert. She wanted a life. She wanted a living insurance, and it was just, thank goodness that she was okay financially. Her and her husband, but it was very sad. What if it was one of those situations where people are literally, what are they doing? Doing GoFundMe
Yeah,
accounts.
absolutely, absolutely.
Okay, and
Travesty.
we don't understand. I mean, it's just a few bucks if you start early. It's a few bucks a month. I mean, if you can go to Papados and you can go, you know
Come
what I'm
on here.
saying?
Right. It really is. I mean, do what you got to do. Everyone's bank account is not the same. Everybody's not making the same amount of money. So if term works for you, I'm not downgrading term at all. As a matter of fact, I tell people if you're going to get term, get the one that gives you your money back at the end of the term. Okay. Get the one
That's
with the
what I'm
return on
saying.
premium. Get all your money back after 30 years. You see what I'm saying? If you're going to
And
get
she's been
term,
paying it for 30 years.
see, she should have got some money back. That kickback alone could have covered. You know what I mean? So most people got that term policy that doesn't even give them anything. So you do have term today, the more sophisticated ones that give you your turn on your premium, and they have living benefits terms now. So it's really a matter of getting the right type of term if you're going to have the term. Like, I get it, you're on a budget. Some people have to start somewhere. I rather you have term than have GoFundMe all day long, right? And definitely better than a final expense because you really are getting
Exactly.
overcharged with a final expense policy. That should be illegal to have a final expense policy.
It really is because it's doing nothing but ripping off you know who.
The
Okay?
seniors, yes, it is.
It's ripping off the seniors and it's ripping off certain people of color who they like to call minority, and we're not the minority. Okay, I don't like to be labeled in that particular category because I'm not a minority. But at the end of the day, they pushed it so much in our community, and again, it creates such a stigma. So now that we are empowered because we have the internet, information is out there. What is the best thing for somebody who's brand new, don't understand what is the best thing that they can do? What type of policy should they be going for if they have very little money to start building wealth?
The type of policy to build wealth, I'm still going to say right now, it's going to be a blend between your whole life and your term. Because there are some affordable index universal life policies out there. Okay. But if that doesn't meet your budget, then the next only feasible option will be term policy. Okay. So just keeping
Okay.
it real with what your budget is. So the least expensive is going to always be the term. And then the blend between term and whole life will be the index universal life. And then, of course, the whole life is the most expensive. The reason why I like index universal life personally versus a variable is because you don't lose any money. And I like to take away the risk. Okay, so a
Yes.
variable universal life, you're going to lose money in those types of policies. So all ULs are not created equal.
No,
Okay,
they're
and you
not.
need to have them structured properly and funded properly. And so if you can't fund them properly, we don't even want you to buy one. We'd rather you get a term all day.
Because some people end up losing money, and
Right.
they don't understand because the person they were dealing with weren't experienced enough to say, "Hey, look, this is the one that you really should be looking at if you're trying to build some type of compounded interest off of the insurance." So,
Absolutely. And the reason why I say index universal life as well is because, most people want to have some type of cash value buildup. They want to have some type of long-term care. They want to be able to use it for leverage for emergency funds if they need to pay off, something at last minute instead of going into debt, credit cards. I get it, you do credit cards, but you can do some of those same sophisticated strategy credit cards with an actual policy. There's no hit on your credit report. There's no reporting. There's no debt to income ratio situation going on here. Okay. So you can still buy your house and have a cash value policy. And so I like the index universal life because you can lock your rate in at the youngest insurable, most healthy state possible. If you do term and then convert it, unless it's convertible, that's the first question you need to
because not
ask.
all time is
You need
convertible.
to find out if it's convertible, if you're going to get the term, and then get that. But if it's not convertible, don't get it. Try not to. Try to get one that's convertible. But if you want to start somewhere without having to worry about it converting, Index Universal Life is going to be your next best option. You lock in your insurability because you're healthy and you're young. Every time you have a birthday, your premiums are going to go up. That's why term increases, and that's why, you know, if you don't lock it in, then why are you doing it? You know what I mean?
Well, say a person is no longer a spring chicken in their 20s and 30s. What about folks who are in their 40s, 50s, and 60s? What can they do? Even
Well,
70.
wow. So, you know, at 70, you're talking about a whole lot more at 70, right?
There's a whole lot
Because
more.
I mean, the cost of insurance really starts to creep around the late 60s, 70s. So, ideally, we still want you, excuse me, one second. You ideally, we want to make sure that you start with your index universal life policy, no matter what. That's going to be my favorite, right? All right. So, how do we structure that? We can structure that differently to where we can give you a lot more term built inside of your index universal life, less of the base, which is more of the whole life side. You have to like kind of picture it in your mind. Give it more term. That way it's less expensive, but now you got that cash value still growing inside of it. Now you got flexibility of payments. So if you fall behind, you can still be able to make your payments, right? With the cash value that's built inside of there.
Is that a lower premium? Right.
Yeah. So it's like I said, it is a sweet spot between the term and the whole life. And so you can structure it to be a less expensive index universal life policy than a. So how does that work? Number one, your death benefit, and number two, how it's built with the ratio of term to base in terms of how that death benefit is built inside that policy. For example, you have a life death benefit of 500,000. Okay, 250 can go to term, 250 can go to the base, right? That's less expensive than you getting a base of 500,000 versus adding in that 250. You understand where I'm going at? So how you build that, and then also, you know, how much death benefit do you really need? I think a lot of people don't understand how much death benefit they need. They want all this death benefit, but we like to give people a really simple equation: DIME, spelling the dime. The D is for all your debt. The I is for how much income do you want to leave your spouse? 3 to 5 years minimum. Ideally, some people want 10, 20. How many years do you want them to grieve before they go back to work? M is for mortgage. E is for education. So $100,000 per child. So that's $25,000 per year per child. So now you have your coverage. Anything above that or below that, you could be underinsured or overinsured. So let's just start there first. Let's not be greedy. Let's just figure out where we need to be at so that we can make sure things are covered. Right. Mm-hmm. Absolutely. Reasonable.
So you said something, you know, and I didn't mean to cut you off there because that the down aspect was fire. Okay, so everybody who's going to be commenting on this, make sure you understand what your downs is. Okay, all right. The thing that you said that I think that's pretty powerful, what people don't understand, is that they always think that they have to use their money. They're cash rich and credit poor. Okay, when you can literally use an insurance policy to literally borrow from, meaning you can become your own bank.
Yes.
By having a particular insurance policy that you can borrow from
all day
and buy a house, a car, even a business.
Absolutely. Okay? Say that again.
Yeah. And folks don't, and they don't. A house, a car, and even a business, and even pay for your child's education.
Yes.
And that's another thing. If you're going to be sending your child to college, because now everybody's thinking a little bit differently, they're going back to learning a skill set.
Yes.
Okay?
Yes.
All right. So tell everybody about that amazing part. I want them to hear from you and not me this time. I want them to hear from you because she's giving up the juice. Okay?
Yeah, I love the whole banking policy, but it's not meant for everybody. Let's just be clear.
Right.
How you do one thing is how you do everything. If you're bouncing checks in your bank account, you don't need that type of policy. You really don't. You're going to hurt yourself. Okay.
I'm sorry, say it again.
You're going to hurt yourself. And you can lapse that policy if you have no negative cash value or no cash value. So the goal is to try to make sure that you understand how it works, understand how much you can put inside of that policy. Okay. There's something called a MEC limit, modified endowment contract, MEC. Okay. That tells you the most amount of money that you can put inside of that policy. Okay. And then of course you've got the minimum that you need to have in there or else it's going to lapse. All right. So IRS code 7702 says that you can take out as many loans as you want. Okay.
Isn't that amazing?
Yes. I love it.
Isn't that amazing? And without having to touch your personal credit.
Right.
And it's not dictated based on credit either. That's what's so important. Everything else is based on they're monetizing your signature. It's based on your signature, based on your credit. They're looking at your profile. With your insurance policy, it's an automatic. I want to borrow against my policy.
Absolutely. So I love that. And so really you have your money growing inside of your policy. Okay. You take out a loan for whatever you need it for to pay off your debt. If you're trying to accelerate your debt payoff, I like to tell people make sure you look at the interest on all your debt. Okay. List them out on a piece of paper. All right. The highest debt, go after that first. I don't care nothing about this. What do you call it? Um, I like the avalanche. I'll just say that. I like the avalanche debt payoff method. I don't like the
Mm-hmm.
other one, the snowball, because you're not
Oh,
attacking
no.
because of the highest, because you want to go after the highest interest
Okay.
amount first. And if you're doing a
Right.
snowball, you're going after the smallest amount, no matter what the interest rate is. I don't want to pay off a
Okay.
3%. I want to pay off the
Let's do it in
25%
reverse.
first.
Yeah. Okay. Gotcha. Gotcha. Gotcha.
Right.
Yeah, because some people attack it from what's the smallest amount so I can get that out the way because it may be little small amounts of something, and but then you're left with the big one.
It's a false sense of security. I want you to
Mm-hmm.
pay off your highest debt. List all of your debt, pay off the highest debt first. I don't care if you're just chipping at it, chipping at it. I want you to chip at it until it's gone. All right. That 29%, that 30 something percent, get that first. And then, work your way down because you have a list and you know what your interest rate is on all of your credit cards. And most people don't know. Okay. When I give them that
No.
homework assignment, they have to go figure it out. They don't know. And so that's how you get out of your debt the fastest, right? So as you're paying off your debt because you're taking the loan out of your policy, paying off the highest interest first, you're finding yourself able to breathe at this point, right? So that's
Mm-hmm.
really what we want to do. Now, your actual loan amount could be anywhere between 4 and 6%, depending on which carrier you're with, right? The average one could be at 5%. Now, with that said, when we look at what and I gotta say this, I'm not giving anybody any financial advice. I don't know your financial situation. Past results don't equal future results. So
That's
historically
correct.
speaking, it was doing say 10, 12%, and you're taking out a loan of 5%, 6%, you're still making a net of anywhere from 2.9 to 4%. And so where are you going to have that in any bank account? How are you going to make that kind of money in a bank account? People are like, oh, I don't trust anything. I just want to keep it in the bank account, but you're not making anything in the
But
bank
you're not
account.
making a
Here's the
dime.
deal. You're becoming
Nobody's
poorer
making a dime.
you're getting poorer every single day if your money is not beating inflation. And we want your money to make what Marvin says, money babies. We want the money babies to now pay for your liabilities and your debt. Okay, that's how you
Mm-hmm.
get out of debt fast. So if you don't have something compounding in the background, working for you harder than you're trading time for money, you're already losing. You're already a step behind. And what are you doing? So inflation has to be a thing that people really pay a lot more closer attention to, because that is what's going to help them get out of debt. If they understand, I gotta, number one, not have to worry about my money growing with a whole bunch of taxation. It needs to grow tax free. Your policy is going to allow you to have tax free growth. Why is it tax free? Because if you don't take out any withdrawals and only take out loans, it's never going to be taxed. That's how you get around it.
That's
That's
another avenue that people don't realize because that is a
yes,
loan.
yes,
You're not withdrawing it. Withdrawing it
yes,
is the tax,
yes,
but taking a loan,
yes.
no tax.
Right.
My favorite part, no tax. You do a lot of say yes, but again, these are things that we're not, in our community that we are specifically not taught. We want instant gratification.
That's
We
true.
want it right here, right now, because generally people are living paycheck to paycheck.
But Dr. Tamara, my favorite part of this whole equation is how people use it for what? Their retirement. I love
Yes.
how people use it for retirement. I like to tell people if your retirement account does not pass the hit list, you don't have a good retirement account. It should
Okay,
be
tell them the hit
H.
list.
The hit
Tell them the
list,
hit list.
the hit list is H for healthcare, long-term care, in other words, living benefits. I is for inflation. You want it to be growing, and you don't want to have to worry about losing a penny. Because what did Warren Buffett say? Rule number one is to never lose money. And he said, when they said, okay, we know rule number one, tell us rule number two. He said, go back to rule number one and never lose money. Okay,
Never
so
lose money,
so
ever,
we got to make
ever,
sure that we
ever.
don't lose money. That's the first rule. And so taxation, you're losing money, right? So the hit is
And they take what 50% of our money through taxes. It's like you're getting money
yes,
taxed in your paycheck. Then you're taxed everywhere you go when you're out, whether you're buying groceries, whether you're paying your car insurance, whether you're paying your car note. All of those things have some type of tax built into it. So by the time you really get your money, really it's like 35, 40% even if it's 40%, it's not even 40%. So even though you think you're making all this money, really technically you're not. But if you're using an insurance policy to build wealth and to build your retirement, as Shantika says, then
Yeah.
go ahead.
So we kind of skimmed over that inflation. Let's talk about that a little bit more because
Okay.
inflation is so super important and compounding your money. While you got to make money for you while you're sleeping, okay? And if you're not making money for you while you're sleeping, and it's not, what I'm saying, producing more than what you're trading time for money with, you are becoming poor every single day. We got to really look at where is your money compounding? How is it coming up against inflation? Super important. We can't drive that point home enough because you're not building any wealth if you're not compounding your money. And then you want to compound your money in a vehicle, ideally, or at least a great portion of it, where you know that there is no risk. So you need to understand what is your risk tolerance? How do I want my equation? You should not be investing in anything that you feel like you can lose money in, and you can't afford to lose that money. You never want to put or lose money that you can't afford, right? So understand how much can you afford, even though we're saying inflation, but we want to make sure that your risk tolerance is balanced inside your portfolio as well. The older you become, the less risk you should have in your portfolio, because will you wait, 8 years, 5 years to have to keep working for your money to rebound? During the pandemic, someone that had $1 million inside their account for their retirement plan, they lost like $500,000, $300,000 because they lost like 30 to 50% of their account, and people was killing themselves. And sadly to say, and we don't want to make light of that situation because it's a serious matter. And so you really want to say, how much can I afford to lose? That's how much you want to have in the more riskier accounts. And or am I willing to work longer to wait for the market to rebound? We always want to assume the worst but plan for the best. We always want to do that, right? So healthcare, inflation, taxes. That is your hit list. Okay. So yeah.
Hits. I want you guys to make sure you remember the dimes and the hit.
That's right.
Okay, that's super duper important. Go ahead, Shateka. I'm just sitting here. I'm just listening because you speak in my language, so it's like it's nice to hear other people in our communities really starting to take this seriously and learning that there are other methods where you can actually build your wealth, and not use everything that you have. Because again, our community is cash rich and credit poor. And what's so crazy is we think that we don't have money, but when you consider that we're the community that spends the most,
Absolutely.
trends.
Absolutely. So I like to say, you know what, again, not losing any money, you got to protect your income. You got to protect your money. And so where else could you put your money at that the courts cannot see it? I'm talking about the IRS. For some people, unfortunately, I've had somebody that was going through a divorce, and he came to me and he was like, I need to have my money. We don't advocate for divorce. We want people to stay married. But if you know somebody's cheating on you, we want you to keep your money. All right. So I'm going to help you keep your money if somebody's been cheating on you. Right. So the lawsuits is the main issue that people have when it comes to losing money. Right. So we can protect your money from lawsuits. We can protect your money from market volatility. Okay. We can protect your money from taxation. It's a win-win-win. Why would you not have this inside of your portfolio at some point?
Now, this is my favorite part right here. And how can they protect their money? Just say the magic word. Because I've been trying to tell folks. Just say the magic word.
Taxation. Yes.
They don't understand.
Yes.
They don't understand. And it's disheartening because as companies are closing down, more warehouses are being built up. AI is starting to take over a lot of jobs. Okay, we need to get prepared to start. We should have been getting prepared prior to.
That's right.
If the plant scandemic didn't allow you to make some money, learn how to figure out what your personal gift is, so you can teach other people something, a skill set. Then you're going to have to figure something out ASAP.
That's
and
right.
What Shateka is saying is an avenue for you to be able to build wealth for your family.
Right.
Now, for yourself or for your family? So, Shateka, how can people reach you?
Great question. My name, Shateka.com. Everything's there. Literally. Simple.
I've been trying to tell people it's just do my name.
Okay. Shateka.com.
Awesome. Give them your social media handle as well.
Sure. My social media, I have so many, but the main one is Shateka Husser Official. I just rebuilt that one from my real estate investing page. So It's a
But
lot of.
wait a minute, girl. We got to talk about the real estate. Hold on. We're not going nowhere until we talk about this real estate. I forgot about the real estate.
Oh
Okay, so how
my
do
gosh.
people building wealth with the real estate? Let
Yes.
them know how you sit up here and build wealth with real estate.
Yes. So I literally was a W two. I'm like, I don't know if people know Storm Leroy, but I was kind of like him. All right.
I
So
love him.
yes, he's
Okay,
amazing.
listen.
So
Yeah.
what I did was I started building my portfolio before I left corporate. So I bought about a half a dozen. I didn't do nothing major like a lot of people. I didn't do 100 and something properties, but I did do a half a dozen
Wait a minute,
properties.
hold on. You're not going to skip over that so quickly. How many properties do you have?
I did six.
Okay, I thought I heard you say the word 100. I'm
Half
like,
no,
whoa.
half dozen, half dozen. That's it.
Okay, I'm like,
That
wait
was
a minute.
it. So yeah, so I did that when I was in corporate, and then I primarily just kept doing. I'm doing what I'm doing now. I wanted to help other people build wealth. The reason why I'm doing what I'm doing is because I thought that not having money was a real issue.
Yes.
Working with people as an executive coach, and they couldn't afford me, and I said, well, you can't afford me. We need to figure this out. So I put on this huge event in Baltimore at the time at Morgan State University. One thing led to another. I had 10 different millionaire speakers there, and we all just did it. And from there, I figured out I needed to be in this industry. When got licensed, and here I am today, still doing it. I love it because when I went to get my license, I learned so much. I was paying double. Listen, I was making double six figures. I was paying six figures in taxes. What I didn't understand is what Robert Kiyosaki taught us in Rich Dad Poor Dad, and he said that
Right.
95% of people are on the wrong side of money. He said only 5% are on the right side, and 4% are business owners, and 1% are investors. And he said, more people need to be like the 1% investor and the 5% business owner, not the self-employed trading time for money, because you're still in
Yeah,
that 95
you're really an
percentile.
employee. You're really an
Yes, you just
employee.
are. That's right. You're
You
you
know,
got a little freedom, but you're still an employee.
right. You're still an employee, and people mix those things up, thinking, "Oh, well, I got my own business." Do you really? Do you really have your own business?
Right, right,
Okay,
right.
and that's interesting. So, all in all, in total, how many properties did you? Are you flipping your properties?
So
Are you
so
owning
when
your
I was doing
properties?
that, I did a little bit of everything. So I primarily was looking at building a portfolio so that I could use that for my retirement plan. However, I ended up doing a couple of wholesales during that mix of properties as well. So I'm familiar with how to do everything, to be honest, wholesaling and buying whole at the same time. So
What's interesting about wholesaling, you don't even have to use your money.
you
I mean,
don't.
that's the beautiful part. People don't even know a lot about wholesaling either.
That's
I know
true.
I'm really interested in doing a tiny home community. Getting the land out here, we're looking at 40 acres. Yeah, I know that sounds crazy,
Okay,
but
you
I know that
better
sounds
do
crazy,
it.
but it's gone up so much per acre now. So
Really?
it's like, okay, well, maybe we need to look at like 10 to 20, you know. But if we could build a tiny home community with just so, because everybody's not living so big anymore, and at this point, we got to get people off the street and give them a place to live,
That's true. That's true.
And
I love your heart to do that.
oh, I mean, I'm for the people.
Yes,
My grandmother, she had over 100 children come through her home. So just to see that people are homeless, and it seems like
hmm,
that's a lot of people are starting to go through that. So we got to start. It says it takes a village. We got to start
it
helping the
does.
people in
It
the community,
does.
because ain't nobody else gonna do it, so somebody has to do it. And
Absolutely.
so the real estate component is really major, and then helping those people, be able to start being self sufficient.
That's
You
right.
know, this is the reason why wealth building is important. And a lot of people don't think they can do it, and you can. And the great thing about this portion of real estate is it don't matter if you've been to jail or yeah, you can do it.
That's right. That's right. You better listen. I wish I could high five you. Yes.
No, seriously, because you got people who have had some issues,
Yeah.
and I'm just like, it doesn't really matter about what your issues
No, your
are.
mistakes. That's okay. You can bounce
For
back from anything.
exactly, like
Have
a
only
friend of mine,
positive expectations.
Newt, right? Newt,
Nope.
Newt. Okay, well, he literally just built a fourplex. Okay, from the ground up. He's not even 30. He's like 27, 28. Okay.
Okay.
I'm gonna make sure I shoot you his information.
Okay.
These young guys, these young girls, really making a change. Saying, "Hey, I may not go to college, but I'm gonna do something else."
I
And to
love that.
see, it is so inspiring.
Yes, it
It is
is.
it's so inspiring, and I'm just super duper glad that people are finding their own way. Like you and I. It's like, okay, yeah, we went to college, we did this, we did everything we were supposed to do,
Right.
and during the pandemic, folks, my friends would laugh at me, girl, what you doing now? What you doing now? Same thing I was doing before. Well, when it came around, oh, you unemployed, you got that little check, but our business went off through the charts. And I'm just saying, the United States is not for employees, for people who work for themselves or have their own business. And what you said about Robert Kiyosaki, like you said, we're on the other side of money. But I think our community is waking up. I think they're realizing that you got to do another way, because 2 and 3 jobs ain't.
That
I
don't
can't.
work.
I ain't even had a job since I was 26. I was like, I could. It's been 30 years. I was like, ain't no way. I
Right.
mean, I work for myself. That's different.
Right.
But to go into somebody's job and them tell you what
Oh
to
my
do, when to do,
gosh, that's humbling for sure.
well, for me, it was when my son got sick and they said I couldn't leave. I said, I am out. How you gonna tell me I'm not gonna be able to leave and my child is running a fever?
You're just a number. Listen, the mission still got to go. It still
Right.
has to happen, whether you there or not. So y'all can have it. Do it.
Exactly. And so for me, that's when I said, I want to start empowering other people to do things. And I'm so grateful to you for being on the
Thank you
show.
for having me. Listen, I appreciate you.
Yeah, we're gonna connect because you're right up the street, so you're not that far from me.
Yes, yes. I didn't bring my shirt, the delegate, because that's why I met you. I don't know if you remember me
When?
with what's his name? Lord help me. The delegate, the VA's delegate conference in Georgia.
Oh my God, are you
Ken
serious?
Collier.
Are you serious?
Yeah.
Yeah, me and the boys were there. Okay.
Yes, we had a conversation.
Exactly. And and we took that VA business, a portion of our business, and soared with it. And girl, we got about what 9 virtual assistants.
Yes.
Who come in and edit the videos and
Yes.
put the stuff up, because I don't have time for that.
My whole staff is definitely virtual. My entire staff right now.
Wow, how many VAs do you have now?
Probably got like 5 that I use for different things.
Is it crazy how? Okay, we are alpha women,
Yes.
to be able to give up and allow someone else to do. Was that hard for you in the
It
beginning?
it can be. It can still be hard, to be honest with you, because they mess some things up sometimes. You got to rotate people out. So I'm
Yes.
right now in the process of hiring an operations manager. So that's where I'm at. I'm on LinkedIn. I'm trying to find me something. Listen, I feel like a self-employed person, and not because I am right now
Yeah.
still.
Oh, so you're still doing things. Yeah. Right now,
Hmm.
whereas
Well, I
you
speak to my clients, right, primarily,
right.
but I want somebody in the middle to do a lot of different tasks that I've been doing myself, right? So that's
Okay.
that's where I'm working at. And I gotta be careful because some people got to be licensed for certain things depending on what they do. But at the end of the day, there's a lot of things that chasing down carriers and all that kind of stuff. I'm not doing that no more.
Yeah. I don't know if it's because I've got no. I'm just like, I don't have time. I'm not doing
Yeah,
that.
no,
I'm just not going to do that. I will definitely say having the virtual assistants has definitely changed our life.
that's good.
It has made some things easier. Sometimes we do have to switch out. We've had a couple of our virtual assistants that have been with us almost 2 years since we were dealing with
Oh, I have some of them. I have about 3 of them. I like that.
you know.
Yeah.
So it's been great because we have an operations manager
Mm-hmm.
now, and she's just taking, Chris has been just amazing for our company. So for those who don't understand what a virtual assistant is, we've hired somebody who's overseas in the Philippines, and they do kind of like the back end of our work, whether it's video editing, whether it's copywriting, whether it is being a manager, whether it is my girl, it wasn't me in the DMs, it was
Right.
my virtual assistant in the
Right.
DMs.
Okay. Yeah, you're right. You're right.
So it wasn't me, because I try to stay off.
Yes.
Sometimes I'm on IG, but I'm trying to stay off of part of the social media because it will be time consuming. It will be.
Yes. You got to stay focused.
Right.
Focus on the
So
vision. That's what leaders do,
exactly.
right? That's what CEOs do.
Exactly.
We're supposed to be visionaries. Who got
Right.
time to be
And
in the weeds?
that's why
No.
my son says, Mom, you're the visionary. I'm
Yes.
like, and I used to be so like, no, I need to do it. I need to do it. He was like, Mom, I need you to release. I was like, no, I don't know them. I don't trust them. That's how it was in the beginning. But now, like I said, we've had them for a couple of years. But yes, I am barely on IG. I used to be on IG like, okay. A couple of messages I was responding to. but she responded to everything when it
Mm-hmm.
came to you. And that's the power of having an assistant, being able to delegate. And that's crazy. We were at Kent's College thing. That's crazy because I'm
Yes.
like, where'd you look familiar? I'm looking at your face like,
Yes.
but we're gonna have to hang out again. Okay.
Definitely. I'll be reaching out. I got your number. I still got it from them.
You have my number. That's what I'm saying. Okay. We're gonna hang out. So guys, that's gonna be our episode for today. Two business women, okay, just chopping it up, talking about how you can build wealth through insurance and real estate and for your retirement. This is Dr. Tamarra with Pwzzy Kat Talk podcast. We'll see you on the next episode. Thank you so much.